going around the room, and I'm going to, or at least would you also just either you stand on either side, and I'm gonna see if I can hear you. Okay. Give me 1 second.
I texted him, so.
Okay.
So he's on his way.
No problem.
So I was like, I'll be by. I forget she's in 112.
Oh, she's not in.
No.
Sure. Okay, good.
Can you hear me? Mic check. Can you hear me? Can you hear me?
I do. Hear
Mic
you.
1, 2, 3, 4.
Yeah, just while you walk around the room.
Okay, can you hear me now? Mic check. 1, 2, 3, 4.
Yeah, that actually works fine.
Mic check. Can you hear me over here? Mic check. Mic check.
Yeah, that sounds.
I feel like I want to DJ, like I'm coming like
Check.
Yeah.
Mic check. Mic check.
Mic check over here.
Mic check.
I'll go lower. Over here. Here.
Mic check.
That sounds
Here.
good.
Okay.
Yeah. The people who are closer are going to sound better. That's what I was
You need anything else?
Treasury to here.
Yeah, because he said, I thought you went to treasury.
Yeah, I'm on detail here.
I'm okay.
I'm gonna head back.
Okay, thank you. Lifesaver.
Pressure this way?
It's, I understand a lot of your colleagues are from New York right now. So.
I was actually supposed to be
That's good news.
He's out in New York, he can't breathe.
I see. How's Sam doing over there?
Sam is good.
I need to reach out to him. I haven't talked to him in a while.
Yeah, we just communicating the other day. I guess he's the deputy commissioner of banking.
Yeah, he has my old job.
Yes.
Yeah.
But he's doing well. It's always a pleasure to see him. So we're just kind of plugging away.
And you guys plugging along now that you've got like equity investment?
Yes, we are. Yes, we really are.
Okay.
So, just kind of joining the program together for the founders. Make sure they understand some of the priorities and initiatives.
Just curious. Post SUV. You guys had challenges or any positive flow or?
We had one customer who had $1 million with us in a personal account, and she just wanted, after the collapse of those 2 banks, she just felt like it just spread it around. She kept working with us, but she really got scared. And maybe a couple of others, we didn't know, so maybe it was a couple of them.
Would you mind straightening out those ones? Too?
Yeah.
People would perceive risk in terms of like when you're going after larger deposits in terms of pricing and stuff.
Pricing is a challenge.
Uh-huh.
Pricing is a challenge as interest rates have gone up.
Hey.
Pricing is a challenge.
How are you?
We have a very stable customer base. There's no rush there.
Can you see these? Should I like angle them?
I think it's fine.
This, does this summarize correctly?
No, I mean, we really look for that to the banks collapse. We reached out to our high balance customers. And, we had things text messages and on our website. Just to reassure people.
Honestly, people just knowing this location, people have a hard time getting here. So like,
There's a lot of pressure.
So my boss is on the side right now.
So you guys since I was at Howard. Like cousin.
Somebody
Just put it down.
Hey, sir, how are you? How are you? Mark. Malcolm with Center Water's office. Thanks for coming. Yeah. I think we have.
Hey, Chris.
Oh, yeah, we have. You're sure.
Martin. Chris, how are you?
Hey,
Good to see you.
Well,
It's a little longer to get in here than I thought.
Brian's running.
Oh, really?
no, no problem at all.
You won't step on the
We
check?
have
Yeah.
hands right in the middle of the inside.
Behind him. Yeah, thank you.
Recommendation to make, and I was a little bit taken aback when they separated.
Yeah, this one's all centered in.
It's kind of strange reading the statute on doing that. But I think that's trying to wall.
This is correct characterization. This statement.
No, there's no grant possibility at all. He did tell me that he would allow
I should have been checked in.
of his exertion funds. I was talking to them how that he use a model similar to ESIP or something like that. He's like, 2 months to put in an application. Yes. So they don't know the answer to that.
What'd you go anywhere fun?
Yeah, it's just 2 session trips, and she was like, I'm surprised.
Yeah.
Was all the,
So what, I mean, what do you think about the 7 million? The CCI? Do you think that's 6 billion? That's right. Yeah, that's, I'll be honest with you, the probably is gonna go to larger institutions, larger projects for the most part. But I do think they were looking for it. But I think they're able to do something like ESIP, put some accounts on the balance sheet, so credit unions and guys, there could be some good that's done. As long as they make sure the rates are low enough. And
Yep.
the ESIP is pretty good, 1%, 2%. So we can recreate that, but just match it with free deposits. Yes. I talked to them about that. That was just.
Is this the place?
Yes.
Place.
And I think this is your seat right here.
This is me.
Yep, and let me know if you need anything else, Melanie's coming over, so she.
Mark said he was gonna be a few minutes late. How are you?
How are you? Thomas. Pleasure to meet you.
Hello, how are you? Good. How are you? Hey, good. I'm a Center Warner's office. Yeah, absolutely. Thank you for coming.
Can you, Dad?
Sure. Let's be right here.
Malcolm, I just got a text from Ryan or Greg. He's studying for what he's going to do.
Great. And you said
Darren Williams.
Yeah. Do you have an extra? You sure?
Yeah. I realized that she was prepared with that.
Yes.
Our member of our president should also be here. So once they do. Get him out.
Great to meet you.
Very nice to meet you.
Thanks for being here and doing all this.
Thanks for
We have you over there.
Thanks for your leadership.
Very nice. Thank you for everything.
Dave Darren.
Beautiful.
So we're excited about what you're doing.
Again, I appreciate it. This is just this. Yeah.
Yeah. Yeah.
Maybe I'll toss it.
Okay, all right, that works, that works too. That's right. That works too. That works too. But yes. Let's see.
Can I go? And tell me when.
Yeah, you're in.
Right here?
Yeah. And then once they start, I'll let you know.
I'll start somewhere. Interesting couple of months. Strategy and execution. They just well, there's so much potential. I have sort of things like that. Folks like you. Not working. And make it nice. Yeah. Crisis before you, and then crisis behind you. Yeah. It really is folks like I probably should be. Just fun. Yeah. It makes it get started. Thank you. Thank you. It's really nice to say that. Finally. It's good to meet you. Oh yeah.
I'm not allowed to.
I pulled you in.
That's okay. I'll see if I can show some.
I did administration.
I knew that that would be done. Maybe a month ago.
How are you doing?
Yeah, exactly. This is the tax bill they're working on. Yes.
I think the first two things that are good stuff, like
Okay. I like my neighbor.
Yeah.
I'll see what
it's my first team. Yeah. Friday, the Congressional baseball game is Wednesday, so it's going to be Tuesday.
So it's right away. Remember Cleveland?
Oh, yeah. I remember our discussion.
Yes, absolutely. You have the great person on the team. Get her advice on how to have it.
Yeah.
outside of Right, that's exactly right.
Yeah, I can only speak for me, although I think that is correct.
As a team.
Well, absolutely. I mean, all you gotta do is look at the tax records that came in.
They were the highest one year.
Exactly. Okay, good. I mean, you do your math, you do your own work. But yeah, I mean, if you look at we just start I generally believe the tax policy is well done.
is he does not get enough credit in CBO's scoring process for revenue generation when it's going to stimulate and grow the economy and boost revenue. And so I tend to feel that the CBO scores are inaccurate and that Congress should, as it did when they passed the TCJA, take that into account when they deliver.
People never talk about CDFI. It's $5 trillion. $4 trillion was the loophole. So it was a $1.5 trillion hole.
That's a good point
But
to
it was
remind everybody.
70% paid
A
for.
lot of base
Even
money.
when CBS just get rid of something like this.
I know. But anyway, to get back to your specific, the point, I mean, if you look at the
How are you, sir?
it generated
Dave Jarrett, nice to meet you.
the strongest, most robust increase in revenue, tax revenue that we've seen since, like you said, the Korean War. Job growth increased, the unemployment rate, wages, I don't really know. A huge burst. In fact, I think it was the thing that really made it slowed it down. Inversions and
I mean, I set him up. I told him what you guys were doing.
bill should work in the context.
There is a very good argument that just last year, the record revenues were very cap gains oriented.
Yeah, I think that is correct. I mean, I'm only relying on the data. He's been very
CBO is saying it's going to go back down.
well, look at what they've done to the TCJA.
Well, we need any.
We're looking at a clip coming up on 199A, and they've adjusted the corporate rate.
I kept asking the 199A, I thought about it yesterday, like, is 199A in there? Because that is the single biggest thing for small business. It should be.
Well, it is
Just
for
a
me.
large one. And, I mean, it's talking about it, it's expensive. And I would also point out that the workers are probably
Very interesting.
the excess business laws thing.
They're living in a world,
Yeah.
big economists. It's all public.
So, but you know, like, the comment that he said was looking at other expenses.
Yes, yes.
That's where you need to pay attention. I just think that it's a significant revenue generator.
Comes down to mainstream.
You can do the 20%, it gets
What's really
more
happening?
expensive tax expenditure, but you believe the revenue.
That's just my first point. The
We're
CBO doesn't
relevant
score these
on their numbers.
They don't recognize the revenue
73 million
generation.
people. We are.
Now I see.
That's who cares.
Does the Senate have a rule?
Oh, I'm just saying, that's I'm going to take your statement and turn it upside down. Exactly the same thing. That was the premise.
You bet. I'm glad you do all
Your
that.
numbers don't tell us. You're not looking.
I'll send Mandy my Korean moisture.
All right, do that.
It's nice to also have
How are you?
How you doing, sir? Dave Durham. Dominic, your office space, South Carolina.
We've already
Yes. Chris Gorman, Quebec. Nice to see you guys.
Thanks for having us. Good to see you. Thanks for inviting us.
Senator, nice to meet you. Tony.
Now we're waiting for, Wally's supposed to be here too, isn't he?
Nice to see you. See you, Antonio. Congrats.
Yeah, that's right.
We appreciate you being here, and we appreciate you co-chairing the CDFI.
It's mutual.
That's a big deal. We're CDFI.
To make this thing work.
I think it really does have a lot of traction in Senator, so I think you guys should put good conversations where I talk to people.
Yeah. Well, then you're helping us get on the lines of people, so, as I said to you earlier.
Well, you brought the perspective of urban and rural, and I think that's not often said.
Yeah.
Talking about this for CDFI that are founded by Native Americans. And so just the propaganda and everything, and, we do, we partner with really services, places where we can't necessarily reach those traditional techniques.
Do you know Rob? Yeah, he's small businesses that there's no way to record it.
That's where the trust is, and that's where the credibility is.
It's a vision.
Maggie Lane still there when you shoot? No, Maggie, did you know Maggie? She worked for
There's a huge opportunity because no one given a choice would that's a very good point. Yeah. Wally, how are you? Secretary Adeyemo. It's so nice to see you again.
See you too. Thank you for coming in.
Glad you're here.
No.
I was meeting with Payday I just saw some and they made this point. There's places where people can't get back. And you know, that's what we do, is we make them so they can't get back. And what we need to do is to help get the banking industry better. Some places, some places, all the regulators pushed out of the system. So, you know, it's geography, but it's also policy for the policies. What I always think about once you do it once, that's what's so insidious. You're not going to do it. So once you do it once, it becomes almost too easy. Basically, you've advanced yourself your wage, right? Exactly. And if you don't have a whole cycle, most people don't.
I think he was in the sissy session for a few minutes. He said he did a few minutes like that. That's pretty usual with our friends. Yeah.
So you guys have like a secret code where you have like all the acronyms and you can like.
I don't even know what this is.
I don't. That's what I feel better now because when Wally said that,
He's the chairman of the intelligence committee, so he hasn't talked to me this morning.
Okay,
I know what it means in Idaho, but
I suspect that was not the meeting.
We don't want to rehear
Would you mind if I, for a second, as I would picture of the roof? Is that okay?
just sort of stand right here.
Maybe come out here and take a picture.
All right, sure. Come here. Jump in, everybody.
Get my finger out of the way. Thank you.
Sorry, one more, guys. One more.
Yeah.
Sure, we'll slow it down.
Yeah.
this is a far better. The last time we got together, it wasn't such a good look.
That's right.
Yeah, we went to New York, I think on March 9th. And we were there. Yeah, we were there to talk to people about this issue. And then we were at a dinner. Yeah, then Blair Efron pulls me aside and says, I have a client that's going to be in need of help probably this weekend. And that was we were off to the races after that.
It's like Darren Williams. It's like Darren Williams. Chris Farmer is Darren Williams.
The night, what day of the week was it? I think that was it a Wednesday? Was it Wednesday or a Thursday? It was like Wednesday night, we had a dinner, and Blair was, at that point, I think, hired by Silicon Valley Bank to try and figure out if they could do a transaction.
Blair Efron.
Yeah.
It was the day of or the day before
The day before.
So I think it was Thursday. I think it was the Thursday.
Friday was Friday. For me, my life was forever changed.
Forever changed for the next. I had everyone in the office on
Yeah, I sat next to him with Ryan that night.
Oh, is that right?
Well, something is going on because the intelligence committee has had multi-hour-long meetings since yesterday. I don't know if that's where Mark is. I'm not sure. Is there a way we can contact us?
I think he told us to get started if he, without him, if he was, yeah, if he was just a
Should we get started?
I'm with Senator Warrior. He should get started.
Yeah.
All right.
He is an intelligence briefing.
That's what I figured. They should, right? Every member of the intelligence committee I've tried to talk to in the last 4 hours.
Not to raise any alarm.
Not a great sign. Yeah, I was just gonna say.
So one of these is you, Wally.
Excuse me.
So you're way out. You and me, Wally, and then we'll go into conversation. Well, we're ready to start. So we're missing our chairman. Senator Warner apparently is caught up in an Intelligence Committee meeting, and we hope he'll be here any minute, and when he does, we'll let him make his remarks. But let me start out, and then we'll go to Wally, and then my understanding is the format is at that point, we'll maybe we should do introductions first, and then we'll give our comments, and then we'll just get into a discussion. And I think that is the game plan for today. So why don't we start down here at this end here?
Sure. I'm Darren Williams from Southern Bank Corp. We are a CDFI based in Arkansas, serving Arkansas and Mississippi Delta.
Dave Jarrett, I'm the CFO at TIAA, and very happy to be here.
Brian Agretta, I'm the CEO of City First Bank in Los Angeles and Washington, D.C., a CDFI and MDI, and extremely happy to be here.
All right.
Thomas McLaurin, I'm the COO of Industrial Bank here, located here in Washington. We are a CDFI and an MDI.
All right. We'll pass you and me, Wally. And
Great to be here. Michael Roth, CEO of Next Street, and have been leading the Economic Opportunity Coalition.
we're just doing introductions.
Great to be here. I'm Mark Mason, CFO at Citi.
Thank you for allowing us to be here. I'm Dominic Marathon. I'm CEO of Optus Bank based in South Carolina. We're a Black MDI and a CDFI.
Good afternoon, Chris Gorman with KeyBank, based in Cleveland, Ohio. Glad to be here.
I'm Mark Neeks with Self-Help Credit Union based in Durham, North Carolina, and I'm glad to be among all the heroes of the community development movement and their supporters. Thank you.
And I'm Dan Latender with Bank of America. I manage the business that includes community development financial institutions and MDIs.
All right, Mr. Chairman. I will turn it back to you. We're just literally just.
Are we just doing introductions and everybody?
Everybody over here's already got.
So you didn't
This is a filibuster for you.
I'm Mark Warner. I'm from the federal government. I'm here to help. I appreciate, my apologies for being a little bit late. I can assure you, one thing, this is a much more pleasant session than I just had. So we'll leave it at that. But I want to start, and have we gone through anything yet?
No, nothing.
At least my view of how we got here. I first became familiar with CDFIs back in about 2002, 2003, when I was governor, and was proud to start something called Virginia Community Capital. During the prior administration, when we saw some of the extraordinary activities that the federal government took to help small businesses, PPP and other programs, we saw that at least initially, and I don't think with any malicious intent, the distribution of those resources many times were not going to rural communities at a fair rate, communities of color at a fair rate, and underserved communities. And in a unusual alliance, and I have given him lots of credit on this. I'm going to give Mike a lot of credit too as well in a moment, but I engaged very heavily with then Secretary Mnuchin that we need to do something here. And there's this underserved community, and there's frankly a under-acknowledged part of the financial sector, CDFIs and MDIs. And we need to get some capital. I'll spare the sausage making, but we came up with $12 billion, $3 billion of which went into the grant program, $9 billion of which went into ESA. Crapo and I have been friends for many, many years. I'm not sure we're still supposed to say this, but we spent a lot of time on 2155, which has come under some review recently from some of my friends. And I went to Mike and said, this is a problem we need to try to grapple with. And we put together a remarkable coalition to get this that $12 billion, which was the largest infusion of capital in history, into these institutions. And I should also quickly add that subsequent actions through SBA and other things also made sure that in later rounds on PPP, I think there was a fair distribution of resources. We also know when Wally came in, when the administration came in the aftermath of the death of George Floyd, there was a lot of corporate America that stood up and said they wanted to do something. Matter of fact, there's been some estimates, not that we put together, but that others put together, that there was close to $300 billion, at least in tentative commitments put out. I think, and it's been a little curious that some of the foundations who would normally monitor this were maybe reluctant to monitor because they didn't maybe want to expose how little of that had actually come to pass. And there's been some estimates it was more in the $5 to $10 billion range. So the three of us, we started a CDFI caucus here in the Senate. We've got 9 Republicans, 9 Democrats. Again, that is a fairly rare occurrence to have this broad of bipartisan support. In engaging with the administration, the Vice President's office, but really with Wally as the lead, we came up with this economic opportunity coalition, and that said, can we commend and acknowledge those corporations who have made commitments to try to make fairer access to capital across all communities in the country? And can we also do something that makes it easier for those corporates who've indicated, financial and otherwise, that they want to do something, but make it a little bit easier, because I think there's a lot of potentially good intentions, but some of the corporates, even larger corporates, didn't know exactly where to turn, other than their specific one-off program. Is there a way to really leverage this? Because these dollars are so potentially able to leverage, we have put this effort together. I'll let Wally make the actual announcement, or Mike make the actual announcement, since I've not had a chance to look at my, looking at my talking point cheat sheet. And just, the only thing I would just add in terms of a bit of irony on all this, and then I'll hush, but which was, you know, when you got the Deputy Secretary of the Treasury and the senior minority ranking member on the Finance Committee and previous chair of the Banking Committee, and, you know, I guess my chairman of the Intelligence Committee didn't help that much on all this, but, you know, but the three of us were literally going to New York to see if we could encourage more activity from that coalition of the willing. And the ironic circumstance was the night we went up to New York to make the pitches was the day that SVB melted down. So to try to keep some of the leaders of the finance world focused on our topic as they were seeing the meltdowns take place, and I quickly added, I was also curious to see a lot of my friends from the venture capital community who had been long-term libertarians of how the government screws everything up. That was a Thursday night. By Friday, who were begging us for government intervention. I'll leave that for a different topic. But I'm really, really grateful for those corporate entities who stepped up, the enterprises who are doing remarkable work around the country that don't nearly get the recognition. We believe what's the announcement we're going to make is only a first step. And with that, I will turn it over to Mike.
All right, well, thank you. Thank you all very much. I'll try to be brief. Mark has really laid it out very well, and you all understand this better than anybody does. Let me just make a couple of quick comments. I think when Mark mentioned that when he came to me to talk about this, it was in 2020 while it was under the Trump administration still, and we were on our third or fourth COVID package. We Republicans during that time spent $4 trillion. And you know, we like to criticize the Democrats for spending debt-financed dollars. We like to criticize the Democrats for continuing that trend. But
we're jointly guilty as charged.
But we were in multiple meetings on how to stand up this economy or keep it stood up or do whatever we needed to do to respond. And Stephen Mnuchin was the lead from the White House on the development of the financial part of all of that. And Mark and I were engaged very heavily with him as we put those plans together. And in that context, Mark raised this to me. I'll be honest, Mark is a great leader and has historically been involved in this. I wasn't aware of the CDFIs and the MDIs and the whole significance of all of that. But it immediately became obvious to me that this was an area that had tremendous need for focus, and that we should build into that particular COVID bill. And we got the $12 billion. Just as an aside, I'll say Mark and I do go back very many years. We were both on the Bowles-Simpson well, I was on the Bowles-Simpson Commission, and then
I was the gang member.
He was the gang. It was the gang of 6 eventually, and then eventually the gang of 8. We put together a plan to fix the entire national debt, and by the way, it was a very good plan, and it would have fixed major parts of our problem, but we couldn't even get it to the floor of the Senate or the House for a vote. But we've worked on those kind of big deals for a long time together and have developed absolutely wonderful friendship over that. And it was very easy for me to say yes to Mark when he invited me to learn about and get engaged on this issue, and now I'm a true believer and absolutely engaged. And just to give you that. Now let me tell you a little bit about Wally. I didn't know Wally until he was nominated to be the Deputy Secretary of Treasury. As happens when an administration changes, the opposition party tries to stop the current president from getting any of their nominees through. That's off the record. Yeah. So Mark gave me a call and said, "You got to meet this guy, Wally Adeyemo, because you and your party should not be opposing him. You guys should work and help him get in." So I said, sure. So Mark and Wally came to my office, and I met Wally and developed a very good friendship with him and helped to get through.
I appreciate it.
And we've been very good friends ever since. And what Mark said to me, Wally, I don't know if I told you this, he said, Wally's the kind of guy that you will like working with because he likes the stuff you like, and that's all turned out to be true. So you see three really good friends up here working together from different parts of this political world here on Capitol Hill, committed to this project. And I'll leave it to that except just to say thank you to you. Because the fact that you are here and that Wally can make the announcement that he's going to make right now is huge. And it is a big deal. And I mentioned to some of you as we were visiting before we started, the next time we get together, this needs to have a much bigger room. And you guys are helping not only do the seeding of the MDFIs, I mean the CDFIs and the MDIs, but the building of this organization. And we deeply appreciate it. It is, there aren't words to say how important it is for when we try to launch something for folks to help it happen, especially for something as important as this. So thank you all. Thank you, thank you, thank you.
Let me just start by thanking these two senators because, as you all know, of people who watch the process, you don't often see this type of bipartisan leadership. And you often don't see it after the bill gets passed. You know, they pass the bill, they take the credit, they go on to their next thing. But the thing that's been the most impressive about both of them has been how focused they've been on execution, both in holding me and the Department of Treasury accountable for execution, but also being willing to go out and to talk to you, companies. And I think one of the things that's important about this is that we're demonstrating, I think, to the American people that the institutions in this country care deeply about getting capital to places where it matters. You have in this room some of our nation's largest banks who are saying today that they're making a commitment to making sure that the ecosystem of CDFIs and MDIs have the liquidity they need to go out and make loans. And I think it's this, and to Senator Crapo's point, this is the start, we hope, of getting more resources into these communities. And I want to thank both the CDFIs and MDIs who've been part of this, but also the large financial institutions who have taken a part, because you didn't have to do this work. It was easy for you to simply talk in general about the work that you're doing in this area, but instead you're sitting here today. Your teams have rolled up their sleeves, they've helped, and have committed to not only doing this, but doing more to make sure that our country is making investments in the communities where it's needed. So today, I have the privilege of announcing the Economic Opportunity Coalition, a group that was created in conversations with these two senators and Secretary Yellen, is announcing that they are taking $1 billion, more than $1 billion of deposits and placing them into MDIs and CDFIs throughout the country. What does this mean? It means that these institutions will now have money to go out and lend against the capital that was placed into them through the Emergency Capital Injection Program. And the truth is that they have more than enough room to take more deposits, and we're committed, working together as the EOC, to make sure that that money gets into their hands in order to make sure they can make loans to these communities where they're desperately needed. As the two senators mentioned, when we were going to New York, it was at a moment where you saw Silicon Valley Bank run into trouble and ultimately fail, and we made a number of decisions that helped to keep the banking sector resilient going forward. But we all know that one of the challenges we face, and we faced even before that in many of these communities, was lack of access to credit. And today, the money that these institutions are placing in CDFIs and MDIs are going to help them provide credit to people who already had trouble getting credit before that and are going to have trouble getting credit going forward, not because of they lack ideas or they lack business plans, but because there are parts of places in this country where credit has not gotten where it deserves to go, in rural communities, in minority communities throughout the country. And what we're saying today is that we're going to take steps to make sure that's no longer true. So I want to say thank you to all of you for taking the time and to make clear that this is really, we're still at the start. We're at the beginning because the reason we're in this room is because we want to work together to make sure that the work that these two started by passing legislation
is going to be fulfilled in ensuring that the institutions throughout this country have the money that's needed to lend to small businesses, to help build affordable housing, to make sure that we grow the kind of economy in this country that we can be proud of, that not only leads to growth, an overall number, but to grow in the communities where it's needed the most. So with that, I think what we wanted to do was to hear from you in terms of both the CDFIs and MDIs are on the table, in terms of what your needs are, but also to hear from the financial institutions that have made commitments in terms of taking deposits and placing them into this ecosystem in terms of what comes next. How do we make sure that we grow to the senator's point, the coalition of the willing here that will take part in helping us make the investments that are needed throughout the economy. So with that, let me thank our two hosts and thank, of course, the Vice President and Secretary Yellen, who have both been huge advocates here as well, and hand it back over to the chairman.
How did I get to be chairman? So we're just going to open it up. We do want to hear from the CDFIs and MDIs on what else is going to be needed. But I also really want to hear from the larger institutions on how we go to your similar brothers and sisters across not just the financial sector, frankly, because we've got a number of entities in this coalition who are non-financial institutions, and we can make it easy for people to do the right thing. And that's, I think, hopefully part of the secret sauce that we're trying to create here. But who wants to? Let's go, Charlie. Yeah.
Sure. First of all, I want to apologize for being a little bit late. Charlie Scharf, I'm the CEO of Wells Fargo. And I want to thank you all for just your leadership on this issue and having this today. I think just a little bit of background. I think we are an institution, obviously, that is large throughout the country. We have the largest presence in rural markets. We do our best to work with underserved communities. And the reality of, even with all of our best intentions, what we have found is that there are a lot of reasons why we do not reach a broad enough group of Americans to serve. And we saw this through PPP, which was referenced, and even through the initial rounds of PPP. Because of a lot of requirements, we found ourselves doing business with those who already had accounts with us, which by nature of that, there are many that are excluded from that. And so one of the things that we did as part of PPP is we took the revenue that we were being paid by the government and said that we actually should give that back to the communities. We did not need to make that money. We were doing it with existing resources. If it's good for the communities in which we operate, it's good for us. So how do we do that? And one of the things that we came to understand is that if we just did that through our normal channels and gave it directly ourselves to people and to businesses, we weren't going to have a broad enough reach. And so what we did is we partnered with CDFIs. And what we found is the people that we reached with that help were very, very different than people that we served. And it was just a great learning for us that partnership really matters. You can have all of the right intents and believe that you've got reach and distribution, but the reality is this is a complicated problem. There are a lot of reasons why historically we've not served a broader set of the population, and a broader set of the population doesn't always feel comfortable doing business with us. And so we can't just take that as a given. We should say, what can we do to make that those walls come down? So partnering with CDFIs was a very big part of that, and understanding the roles that MDIs play is incredibly important. And many of us made commitments and have made equity infusions into MDIs, but to the point is, the equity is a step, but it's not a big enough step. Putting deposits into these institutions so they can actually lever up the equity in a very prudent way will have a much more significant impact. So, the commitment that was made that the Deputy Secretary announced is incredibly important. And I think it says an awful lot about the understanding and the willingness of these larger financial institutions to try and solve a problem which so clearly needs to be solved. Just to answer, Wally, your question, directly I would say, first of all, I think we all can be very helpful as the larger institutions in spreading the word about not just what we did, but why we did it. It's just, you know, just like anything else, you can ask people to do something and hope you'll get some compliance. If you explain to people what the issue is, how you're actually having an impact that goes well beyond just a press release, that is something that really drives people to want to be part of something. So I think that's something that we'll do. And then the other thing I think that, you know, that we have started conversations about is where we have corporate relationships, where people are leaving money with us, we can be influential in helping educate our customers as to how they can be helpful in placing some of those deposits more broadly. So to Senator, your point, we really do open up the spectrum. So listen, I just want to thank the senators and the Deputy Secretary for your leadership on this. We look forward to continuing to help solve this issue, which is so important.
Great, thank you. Now, although one thing we have learned, and I think, you know, we saw this even with like the Google money and stuff, the more we can make sure these deposits are a little more sticky.
Word of the hour.
So I thought rather than, you know, me trying to, you know, I've been educated on that, but if you all want to, anybody want to go ahead and speak to that issue?
I mean, I'd love to kind of just, first of all, let me thank you all again for the leadership on this and the backdrop that you gave with regard to how this coalition came to be. I found inspiring and made me excited to be part of it, both as the CFO of Citi and Citi as an organization, but also as an American. So thank you for that leadership. You know, in our case, we've been working with MDIs and CDFIs for a long time now. And we very much view it as a partnership. It's a partnership that has both equity investment, but also loan participation and revenue driving opportunities for these partners. It's also a partnership where we try to lend human capital and technology and operational expertise. And it's a partnership that's not just in the trenches of our organization, but a partnership that Jane and I personally spend time on. I know a couple of the CEOs around the table because we have a quarterly cadence for how we can do more together. In the case of Citi, we're a large global institution, as you all know, in over 90 countries. What people perhaps don't appreciate is that our retail banking footprint, we've got under 700 branches. Many of our peers have thousands of branches. So in our case, it's quite real in terms of our inability to reach these communities. And this becomes an extension of our vision to have an impact on the racial equity gap and on stabilizing these communities and reaching low-income, moderate-income households and small businesses. This is in fact that extension. And so we remain committed to it. We're excited to be putting in $250 million of deposits. We too have begun to think about how we leverage that through conversations with clients, conversations with other partners. I was telling, I think I was telling you, Senator Crapo, earlier that you know, I had lunch with a CFO of another large corporation earlier this week, and I told him that I'd be back to talk about deposits with MDIs and CDFIs. I've got a meeting coming up in 2 weeks with the 30 or so black CFOs that support publicly traded companies. This is on the agenda to talk about how we collectively can do more here. And so I think there's a huge opportunity there. I think your point around stickiness is quite important, quite relevant in this environment. And I think we should be thoughtful about how we put the terms around the agreements for these deposits with that in mind, right, to lend itself towards greater use. And I also think that this is quite timely, right, in light of your dinner just a couple of weeks ago, I mean months ago, and what we've all been through, to double down and really, with all due respect, try to help lend credibility to these institutions is important at this moment. And the final point I'd make is that if we really think about, as I think about why this is an extension of our vision, our strategy, the reality is that we don't have the credibility in these communities to go at it on our own. And what MDIs and CDFIs have been doing for years now is investing in building that trust and that credibility. And it's the only way that we can bring safe and sound financial services and products to these communities.
So Martin, you usually have a view. What is it, how do we best help in terms of getting money to flow to CDFI? What's your view at this point?
So let me say a little bit about deposits. So while we came down, we did a visit, and I was a little skeptical to begin. Say, a deposit can be an initial relationship, but as we saw with Silicon Valley Bank, I'm glad you made the connection. If you have a really big deposit, and we've had just generous support from all the banks that are here, you know, $25 million from PayPal at very concessionary terms, $50 million from Northern Trust at 0.25% interest. Folks who've come in, and we're larger, we've got 78 branches, $5 billion in assets. But a deposit can be harmful. If it's there and it's larger, and then it disappears, then you have a Silicon Valley Bank on a very small scale. So to me, what I love about a deposit is it's an initial start of a relationship, but it can't end there. And if I could sort of put out my wish list, I would like to see the deposits have a 1 to 2 year notice provision. So whether it's a 30-day CD or it's there for short term, that it gives the small CDFIs a chance to replace it if it's going to be pulled out, because there's nothing that could be more harmful than a very large deposit. But as a relationship starter, let's talk about credit unions. There are 518 minority depository institutions in credit unions. So if you just put a $250,000 fully insured deposit at each one of them, it's $125 million for each institution that wanted to do that. So the opportunity to get a start is right there and available. When I think about, I really think that ESIP was a game changer, so thanks to all of you who put that together. It changed the world in the community development world. It moved from saying, okay, we've got some equity. Now we've got to figure out how do we leverage it responsibly, and that can be deposits or it can be long-term debt. And so one of the things I particularly want to grab my pension fund buddies at some point and say, how can we access the fixed income allocation that large pension funds have and be able to create affordable housing? Every one of the 78 communities where we're located have lack of supply of housing as their number one problem. They are just absolutely dying out there, both rental housing and homeownership housing. And we could go and take, by having what I call voluntary rent control, where you purchase a facility, an apartment complex that would ordinarily in the market just be jumping up the rents every other year, and have a commitment from the owner, the nonprofit owner, that they're going to have it be affordable forever. And you could do tens of thousands of units almost immediately just by doing this with $1 billion, just a measly $1 billion, which, is a rounding error for my buddies at Citi and Bank of America, right? So I think that what we've done is a really great starting point, and I want to, if I could lie down and do a curtsy for the three of you, I would do it, because I think that what you gave us was the potential with ESIP to scale this up to reach some of the size and need that's out there. I can't thank you enough. Wally is a hero. I've spent a lot of time in Richmond with Richmond Heritage Credit Union, and small credit unions are messy. Small financial institutions are messy, but they really are reaching people that even a $5 billion, we think we're really tiny. I used to joke that I'm the size of 2 or 3 Bank of America branches in urban areas, and yet it's still large in our field. But there are people on the ground that we've got to help get the money. So I think deposits are a great start, but not to think that that's an ending point, because really it's connections that people need. They need to have expertise on how to do asset liability management and interest rate hedging and things that will allow products to reach poor people. So I think this is a fabulous beginning, but I hope it's not anywhere near the end. Thank you.
I'm happy to jump in. We are a little bit of the odd man out here. So to Martin's point, we are an insurance company. But I'll tell you why this matters to us. We are committed to helping Americans retire and retire with dignity. And part of that has to be ensuring that they have access to wealth and wealth accumulation opportunities. We launched a campaign a year ago which pointed out that a third of American women will not have enough money to retire. More than half of the people of color in America are not on track to retire. And so our commitment of $100 million to this initiative is a key start to that. It's in sync with everything else that we've been doing. And so to your point, Martin, we announced a transaction last month where we increased our affordable housing AUM to just over $6 billion. And I think this is a key part of ensuring that we get more and more Americans on track to retire. And so I can't thank you enough for the opportunity to do that. Like I said, we're a little bit of the odd man out, and so we're happy to tell our other odd friends about how they can, quite frankly, do this and why it really matters. I think our treasurer met with you, Dominique, a couple of weeks ago, and so that's part of our commitment to ensuring that we, quite frankly, do the right thing here.
That's one of the things that I hope now that we've got EOC and it's going to be stood up as an organization and have some staff, that a real value would come on literally standardizing even some of the formats. It might be a slightly different, may have a slightly different approach. The insurance company, of course, what Charlie's got, or what City may have. But if we could standardize some of this so that, not with a one-size-fits-all option, after what Mike said about, 1 year, 2 year money. Longer term money is exponentially much more valuable. But that's one of the things we hope that would, those of you who want to be advocates out in the community, we all know a lot of people got good intentions, but unless you can make it pretty easy, it goes to the bottom of the bottom. It
has to be easy for both sides.
Yes, sir.
It's easier for the CDFIs and the MDIs, but also for the institutions.
Yes, sir. Come on, guys, jump ball. Don't be shy.
So, Chris Gorman with KeyBank. First of all, I just want to thank each of you for your leadership. $12 billion is just phenomenal. $9 billion in the ESIP is just amazing. If you think about the $1 billion commitment that we heard today, that's just so important. We've been fortunate enough to be part of the Economic Opportunity Coalition, and we at Key have been raising $1 billion in deposits, because deposits are the raw material. I agree, it's just a piece of what really people want to build a full relationship, but the need is amazing. And as you travel around the country, whether it's urban areas or it's rural areas, we happen to be kind of across the top third of the country, and so it kind of runs the full gamut. And as you drive around, when you see things like places where there's a lot of check cashing businesses, etc., that obviously is just proof of the need to help people be banked. And the reason people aren't banked are several. Charlie mentioned lack of trust, I think, on behalf of the financial institutions. There's also other challenges like just straight geography. There's also other challenges which frankly are both industry and regulatory, where people are just sort of blocked out of the system. And the more people we can have in the system, by far, it's by far better. I mean, all the things that all of us are trying to do, we're only as strong as kind of the whole communities, and we got to get everyone involved. The other thing I think we can do is really be out explaining to people the role of CDFIs and MDIs. I mean, we were talking earlier, Senator, about all the acronyms. You were in some meeting that we were asking what the acronym was. But the important thing is that we really communicate to people what these important organizations do, how they reach people that otherwise might not be reached. And so I think that's an important part of what we do. So I just think I think all of that is really important. We're really proud to be part of this. I think if you think about kind of where we are, I think we're kind of in the first part of the first inning. I think there's just a ton to do, but I just want to commend the leadership at the end of the table for really bringing this to light. And one thing that's interesting about what's been going on in our industry, as everybody sitting around the table knows, is all of a sudden people are acutely aware that deposits are really valuable. And I think people that have deposits, and we know who they are just outside of the financial service, all of a sudden they realize this is something that people really care about. And so I think that inures to our benefit as well as we think about people sharing their deposits. So with that, I'll just say thank you. Thank you for everyone that's here. Thank you for the leadership. We're really proud to be part of it.
One quick thing on this before we move on is that you mentioned rural. I still think it's important. You look at the 18 senators, 9 and 9, they're not the regular suspects. On either side of the political line. And there are a lot of these members who, and Mike gets a lot of credit on this, that may not have large urban areas, but they, there's, you look at that initial rollout of PPP, it was a problem in rural communities as well. So we got a much different coalition here on the political side or the congressional side than is normal. And if we can leverage that more, again, that's going to help everybody across the board.
I think affordable housing is a challenge that we've talked about in Idaho just as much as it is in Los Angeles and in Washington, D.C. I think my job is to be the COO of the Treasury Department, so I want to get tactical. And I think one thing that we could really do is standardize term sheets. To the point here, if we can, across the institutions, find a standardized term sheet in terms of this will be 1-2 year money, and we can go out to the CFOs of large corporations and say, this is how you can do it, because they all bank at your institutions. And if you can tell them, this is how you can do this to put your money in these institutions, and this is how you get the safeguards, I think that will help us move more of the capital, because even I think to Mark's point, part of this is relationship building. And the way you start to build a relationship, even for these large corporations, is to feel like they have a route to getting the money into the institution that is as easy as possible. So would like as a follow-up item to think through if there's a way for us to work together with the CDFIs to come up with something, to your point, that both works for you and you think will work for your clients, but will work for the CDFIs.
And what while I'm talking about, we get standardized, the other kind of next step, and I don't want to run before we walk or whatever this thing's supposed to be, is create that secondary market. We talk about another way to lever up all this. If we can create a healthy secondary market, there may have to be some additional dollars in there for first dollar loss because just the nature, but there's some really cool things.
He's a dreamer. I like that's why I like to spend time with them. But I think it'd be great to hear from some of the other CDFIs in terms of you've been in these businesses for a long time. I think ESIP, the legislation the Senator's put forward, is a game changer, but it's again the beginning of a long process you're going to. Brian, I've spent time with you. How's business and how do you think about this?
Sure. First of all, I have to go back and just thank the group coalition, obviously OC, and the White House for pulling this meeting together, but more importantly, more than a year ago, pulling this effort together. It's interesting from a timing standpoint. Right? If we were 6 months ago talking or a year ago talking, the things that might be important to the institutions around the table are different or heightened in a different way. I was at a banking industry conference. I was awake. No snooze. We're all bankers here. Many bankers here, but banking industry conference, and they put up an interesting slide that said, who would have thought, it was about planning, who would have thought that you would have seen equity values drop by more than 50%, liquidity crisis, one of the largest global banks in Europe fail, and several regional banks. So how's your planning going? My point being, things have changed pretty dramatically, and this conversation is incredibly timely, and this effort is incredibly important. ESIP was enormous. It was indeed, Martin, a game changer for our industry and the amount of capital, the terms in which it came in, and the flexibility that it really allowed institutions to transform themselves and thus their communities by having a low-cost capital base to do so, of permanent regulatory approved capital to do so. But then, as we've been discussing here, leveraging that with the real fuel of deposits becomes essential in going forward. And we certainly in our shop last year put out $300 million in mission-focused lending into the communities we serve. But we outpaced our deposit growth. And that was before the beginning of this quarter. Or beginning of this year. So deposits are absolutely essential, not just for risk of failure, but in terms of fuel for growth. And the growth that we're talking about here is how do we serve as that distribution system that we were talking about as you related to in PPP or in affordable housing. The CDFIs and the MDIs that exist are that existing distribution system, very well connected to their communities, very passionate about what we do, and not confused about why we do it. And so I think, again, there were deposits that I believe are some of the easier steps to do, particularly because there's ways of structuring them for insurance to cover them with products that many of us have used over a great period of time. The fact that they may be a fairly minuscule portion of a balance sheet of a corporate or a bank, to be able to dedicate to a space and be a game changer there. But I also agree it is the beginning of the relationship, because once we have that relationship and have the ability to talk about how that both benefits the depositor as well as the institution, then we can leverage that into other conversations about, well, how else can we help you through our connections and distribution and intent and skills on the ground. So those are some of my thoughts. Thank you.
Maybe one point to just, something you said kind of triggered this, and one of the things I think that collectively we got to be mindful of is the last time banks actually got together to do this was to try and stabilize a bank that was failing. So what we don't want to happen is there to be a negative stigma with the idea that we're pulling together $1 billion to actually fuel growth, to your point, with MDIs and CDFIs, right? So that I think is something we should just kind of keep at the fore. I think that the second point is I'd be curious about the idea of your point, Deputy Secretary, of safeguarding, right? And so I agree with your point on the term sheet. The other point you made was around safeguarding. And how important is the provisioning of human capital, additional resources around asset liability management, for example, to us being able to get some more momentum, I should say, around this deposit initiative? Because the whole world is now sensitive to this idea of asset liability management. And so how important I'm curious as to how important you all think that is as to augment the deposit.
Mark, I'll comment on it since Citi has infused our bank with human capital for 2 years, actually. And so we have the benefit of, basically creating a digital bank with support of talent that we could never find or afford. But let me start by thanking you guys just really quickly, and your teams for leaning in. I remember speaking with Chris Weaver at 9, 10 o'clock, 11 o'clock at night during the ESIP era, even later. So your teams are incredible. They're working incredibly hard. I want to make sure that...
That was before you even came over to mine. That
That's
was
right.
just a damn treasury.
That's right.
That's when he used to work for me before you stole him.
Well, you're working pretty hard. But and I also want to thank all the investors in the room, and those that are not in the room. There are several corporations that have leaned in, especially now, which is becoming more difficult. So I want to make sure we recognize them. And those that have not invested, I'm sure you all will invest before we leave here today. So thank you for that support in advance. But I have 2 quick points I want to make. So one, the murder of George Floyd sparked an awakening and created a moment, an opening of understanding. I think you, Senator, as you pointed out, where we can have a conversation around the gaps. But that has now shifted into, okay, we have some trauma that we need to heal, but it's a tremendous economic opportunity for America to close these gaps that exist. And I think that's, Mark, you have leaned in, and Charlie, your team has leaned in, everyone around the room has leaned in. I think there's just a tremendous, Robert Smith talks about the wealth gap that could, if it were closed just a tiny bit, how much wealth would be created in America. So that brings me to the first point, which is, those of us around the table, I think, are gravely concerned that this moment is not going to be a movement, that it will fade, and we'll forget about the opportunities that lie in our communities that are underserved, those communities that Darren Southern Bancorp serves, or Martin, you serve in your communities, and same thing with Brian and Industrial Bank. So we want to really think about not just the stickiness of the deposits, but the stickiness of this movement. And so my ask of you humbly would be to think about making sure that the EOC has leadership and long-term commitments to keep that movement going. Because if it doesn't, it will fade. And that brings me to the second point, Martin. I think we've seen this, and I've been educated by folks that have been in the trenches like you, Martin, for a little bit longer than I have. That pendulum, when it swings, it's not just the banks that are in those gaps. It's not just the banks that are in those trenches like our bank was in 2008 and 9 as a 100-year-old plus black-owned bank in South Carolina. We were in those trenches, we were in those gaps. And when that support came up and there was nothing in that economy, we almost cradled. So I really want to challenge the group to think about how do we create a permanent movement out of this where it really stays. And it could be harmful not just to the banks but to the communities. And I'll close with a quick example of our bank, with the support of ESIP and many folks in this room, we doubled our loan portfolio last year. And over 90% of those loans were what we define as mission-aligned communities, primarily black and brown communities, underserved rural communities. We define them as underestimated, high-potential communities that can build wealth for themselves and generational wealth. Well, this quarter alone, because of the panic buying of SVB, the triggered by SVB, the liquidity leaving the system, we're facing, those of our mission-driven institutions, we're facing a perfect storm where money is not just leaving the banking system, going to treasuries or money market funds. Cost goes up. We pay a huge premium compared to what the large institutions pay. So it's both cost and liquidity is hurting our communities. And in our bank alone, we're a $400 million bank. We probably gave up $30 million of high-impact, mission-driven lending just this quarter. That our board said, look, we are concerned about our liquidity position. We have almost 50% liquidity ratio, but who knows what could happen. So what you all are doing today, everyone in this room, couldn't come at a better time, because we need everyone to lean in now when we're facing this. And Mark, to your point, that's how you set me up perfectly, is we don't want to send a message that we're in distress, because we're not. I think all of us are extremely well capitalized, thanks to folks in this room. But I think there is wealth building opportunities that are being lost every day, every second, that we don't have this liquidity that frankly may not ever come back to our institutions.
Dom, I do want to say though, I don't believe this is a moment. This is just a step along a continued path to growth. CDFIs, back 20, 25 years ago, were 1/30th of the size of the industry is today. All the institutions around now have sizable investments in portfolio. We work with 260 CDFIs operating in all 50 states. One of the things we have found, and all of the banks have found, is that CDFIs are great partners for doing things that the private sector can't do all by itself. If we combine a little bit of philanthropic support or government support with a lot of private sector capital, you can finance loans that the private sector can't do all by itself, where the risk is a little too high, the cash flow is a little too low, and often it just takes a little bit of philanthropy or government subsidy that you want to leverage with an awful lot of private sector capital. So when we started thinking about where do we want CDFI partnerships, we want CDFI partnerships every place. We want that kind of an organization that can blend ESIP with deposits to do financing that can't otherwise be done. We want CDFIs everywhere, which is why we're at 260 CDFIs. I don't think people now understand what CDFIs are. The banks do. We need greater awareness outside the banking institutions, because when you meet CDFIs, when you understand both the value of the impact and how the financing works, I think there's a great opportunity to grow. It's not a moment, Dom. It's just a step in the continued growth.
But those of us who remember Rodney King, the moment for racial justice doesn't always persist long term. So I think the fear is a real fear that this will move on and the people that are struggling will still be there.
So everything has been said almost. but everybody hadn't said it. So let me join first in thanking Senator Warner and Senator Crapo for your leadership for this caucus that you've created for shining light on CDFIs. Ms. Secretary, thank you for your leadership as well. And I want to steal a page from Don, because I thought the same thing. I want to say thank you to Chris Weaver, who really led the ECIP program and spent a lot of time with us. And as a CDFI based in Arkansas and Mississippi, I have to recognize he's an Arkansan. So I want to make sure you guys know that he comes from deep roots.
That's enough nice things about it.
But really just a little bit about what it means to the space. So Southern, we were among the first CDFIs ever created. We were founded by then Governor Bill Clinton, who was governor of Arkansas. And then when he left Arkansas to become President Clinton, he created the CDFI funded treasury based partly on the experience of Southern. So we were among the first certified who've been around for since the beginning. And I came on in 2013 with a really effort to try to grow the bank, and we had $33.8 million in CDCI debt, and Don was with us at the time, and he helped us kind of get out of that. But as we turned that around and started to grow, from about 2017 to right after George Floyd's murder, it took us that long to raise $50 million. And we leveraged it and put it to work and grew. We're now $2.5 billion in assets and looking to grow now, but it took us that long to raise $50 million. But in July of 2022, we have $250 million in ESIP, which is a game changer. And we are looking to more than double in size, and obviously it's going to take deposits to do that. A little bit about who we are and where we serve, because I think it's meaningful and shows how the impact of the work. So in 73 markets, 73% of our branches are in market in counties with less than 25,000 people. 23 of our 56 locations are in majority and minority census tracts, and 55% of our branches are in persistent poor counties. So these are counties where 20% of the population has lived below the poverty line for 30 years, and it makes a difference in those markets. Having this capital allows us to go deeper. Senator Warren, you talked about the secondary market. Another thing I want to talk about, because that's real, that's meaningful, particularly in rural communities where they're in the mortgage space. There's no comps, so I can't put that loan in the secondary market. I can't give that customer a 30-year rate. Today, we have 4,635 single-family mortgages on our books, 411 million of our $1.5 billion portfolio. I can't give those customers a 30-year mortgage. I can give them a 3 to 5 year and have to turn it over. At a secondary market, and I can tell you they perform. They perform well. If there's a secondary market, we could unlock more capital for those folks. Now, we've got a housing shortage, and that the affordable housing is a real issue. But it's meaningful, the markets that we serve. And you said it quite right. Everybody said that these have to be sticky deposits, though. We have to know that we can loan on them. If they're only here a short period of time, they don't do much good if we can't lend against them. And all of my friends, I'm a lawyer by training. I learned the banking space, and I'm still learning. And all my friends say, they want to help me. They're going to put a deposit in the bank, and that's good. But we don't make money unless we loan it, and so we need to have it long enough to be able to do that. So I just appreciate again the leadership, and I'm glad to hear that this is just the beginning. This is the first ending, as you said, and it is desperately needed for the folks that we serve, because we put these dollars to work in ways that have real impact on people's lives and actually change their lives and build wealth for families.
And can I just add one thing? And I think I don't want to speak for Mike, but we're going to, when I was governor, I got to set my own schedule. In this job, we had a vote called 20 minutes ago, and it's a 15-minute vote now. In Senate time, that means we got another 5 minutes, so it's already 20 minutes, but it does mean, so this may be one of my last comments, but I want to pick up on the point that, we may need, and this may not come from our financial institution, it may come from some of the corporate contributors, both some sticky money and that willingness. If it's $1, 2 cents, 3 cents, 5 cents of that dollar actually goes in a philanthropic bucket on a first dollar loss basis, because that again can help on the standardization if we get into a secondary market, and it just helps this move through, number one. And number two, one of the things I've had a number of conversations with is that, and let me be clear, without sacrificing safety and soundness in any way, we need the regulators and the examiners to actually get a little bit of education on how they look at you all, because it's a different, slightly different business model, and what might be problematic elsewhere, if they understand the business model, and I'm not looking for regulatory forbearance or anything else. I'm, without a single bit of sacrificing safety and soundness, if we simply had a better education process for some of the examiners, I think would be important. Because they don't understand that point, that there's no secondary market if you know comps, if there's not a.
That's a wonderful point. There's a huge disconnect between what's said in DC and what happens when they get there.
Hold it.
On more than one occasion, I have had provided a CDFI briefing one-on-one to examiners who come to our office to tell them who we are and to explain to them. So there's a huge disconnect. So I appreciate that. One last thing I want to say as we're thinking about how we continue to attract others to this space to raise deposits. I'm the incoming chair of the CDBA, which is the Community Development Bankers Association. We are right now, along with the National Bank Association, trying to figure out ways that we can receive it in a way also that'll be beneficial. So we're trying from our standpoint as well to do some standardization to allow the corporate dollars to come in. So we recognize we have a part to play in that, and we want to really try to be of assistance in helping that regard as well.
We're going to leave this to Wally. Mike gets the last word from the Senate.
We just got the text saying that the floor is looking for us.
So we don't want to, in this moment of joy, get nipped by our constituents. Where in the hell were they when this vote, whatever critically important vote we're voting on right now?
Exactly.
Right? Because you don't know either, do you?
No. It's a nomination. And I'll vote for it. Maybe. I just want to say thank you. This has been incredible, as I said at the outset. What has allowed us to make this announcement today is incredible. This is a beginning of another meeting like this when the room is 3 or 4 or 5 times as big. And all of these comments that you've made about how we can accomplish that are not lost on me. I just want to thank you all again. That's all.
Thank you.
Thank you all.
I apologize for having
Bruce Murphy. No, he's retired, although I just had to. No, he has retired, I just had time to the last part. He's such a lovely guy. No, Bruce is incredible. I think he's got the second most popular Pittsburgh.